Welcome back to FlexCandle, where we read the candles and flex the moves. I'm Flex, and today we're diving into a full top-down analysis on gold. Let's start off by going through the higher time frames, and let's work our way down to the lower time frames, and let's see if we can find any good setups. Now remember, this is not financial advice. I'm not a financial advisor. You're responsible for your own trades. Always do your own research and trade at your own risk. Okay, so let's hop into the charts here, and let's start off here with the 1 month chart. And what I could tell you here is that gold has been ripping like crazy for the past year or so here. I could see that we broke out exactly about a year ago, March 2024. Before that, we were kind of hitting resistance at about 2000, 2100 for like a year or two, and then we just broke out. You hardly see any red candles here. Now, I personally think that gold will continue going up in the long term. I could see $4,000, $5,000 gold, hopefully even higher. But I think that for the short term, we might be cooling off. And the reason for that is because, as you can see here, the stochastic RSIs are kind of toppy here. It looks like we might be able to make one more little move, and then we're probably going to start coming down. And another reason is we're kind of far away from the 21-day moving average, which is currently at 2,420. And the price of gold is at 3,300 right now. So one scenario that I could see playing out so that we don't have to go all the way down to 2,400 is maybe we could start flagging out right here for a couple of months, and maybe price action could start going sideways a little bit and give enough time for the 21-day moving average to start coming up here to touch price. If that doesn't happen, then I could definitely see gold starting to come down and probably come down to around 2,800 for support, maybe 3,000. Let's see what happens. Let's take a look at the 2-week chart. The 2-week chart still has a little bit of room here, so this is why I'm thinking maybe we could go still a little bit higher, maybe one more candle up or so, but then eventually I see this curving down. And on the weekly chart is also toppy. As you can see, it looks like we're about to roll over here, and currently the 21-day moving average on the weekly is at 2,800 basically. Now, another reason that I'm also seeing that we might be coming down is I'm seeing bearish divergence. And as you can see here, the RSI is kind of flat with the price action, but over here on the actual chart, you can see that it's going up. So this is bearish divergence. This is basically telling me, especially since the RSI here is toppy and the stochastic RSI here are toppy, that this is going to start coming down. So it's possible that we might, like I said, retest 2,800, maybe 3,000. The only chance that we have of that not happening is if we just continue going sideways here and letting this fill out until we're able to actually break out. And now let me take a look at what maybe the measured move would be here if we did break out. And if we broke out here, the measured move of this flag will put us pretty much at almost 4,000, 3,950, around that area. So it's possible that we go sideways and we break out, and then maybe from there we start pulling back, and maybe we end up where we are now at 3,300. Another thing here that I'm seeing in gold that makes me think that, you know, we're kind of topping off here is prior here, this is actually a cup and handle that I'm seeing here. So this is the cup, and this pretty much was the handle. And we do the measured move here of what that would be. It looks kind of like we already kind of played out this move. We take this stick and we put it here, and we end up fixing it. As you can see, it's actually perfect. We actually already played out this move completely of the cup and handle. So since that move already played out, I'm pretty much thinking that it's time to cool off a little bit here. Now let's take a look at the daily chart. Here we see the stochastic still has a little bit of room, but it's starting to fold over here, so it's possibly we start coming down. The 21-day moving average here is at 3,111. So, and we're also at the top of the flag here, so it's quite possible that we'll start coming down here and then probably start ranging up and down, and we just play around here going sideways until we could break out. Let's take a look at the 4-hour chart, and in the 4-hour chart, we're already toppy here. We're already starting to fall down. The good thing is we already bounced off the 21-day moving average. We're on the 4-hour chart, which is at 3,273. We haven't been able to break out. We have a wick here, which was resistance at 3,356. Let's take a look at the 1-hour chart. The 1-hour chart still has some room to go up. This actually looks like it could be an inverted head and shoulder, and possibly that could play out, and that'll probably just bring us back up to this resistance, and then maybe from there we start falling down. So what I could tell you guys is, I think for the short term, it's possible we might break out, maybe touch 3,500, even 3,800, and then come back down to 3,300 where we are now, or we might cool off all the way down to 2,800 or 3,000. I'm not really much into investing in gold. I actually just started because I'm really seeing that it's starting to break out, and I really do feel that maybe it could go to about $4,000, $5,000 in the near future. So I started dabbling in at around 2,900, around there, but I'm personally not going to be buying any more gold until I could see that we get closer to this 21-day moving average, and if it doesn't continue to break down from there, that's probably where I'll start loading up. All right, that's the breakdown. If this gave you any clarity or a setup to watch, do me a favor, like, drop a comment, and subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is FlexCandle, where we read the candles and flex the moves. Catch you in the next chart.